Welcome to the Investor Coaching Show, a podcast to help you get an insider's view of the financial world and escape common investment traps. We look at the financial news of the day and help you make sense of it so you can relax about money. And here's your host, Paul Winkler.
All right, back here on the Investor Coaching Show, Paul Winkler, Evan Barnard, Jim Wood. Okay, so I, recently been doing a little bit of picking on some of the where people get advice about investing. Younger people, especially, getting a lot of their information about investing from places that I just think are a little bit questionable, leading them to do. My son and I, Andrew, have been talking a little bit about this. Some of his people that he knows that actually have been. The people that he knows that are investing, that are his age and in their 20s, a lot of them individual stocks, in individual companies, cryptos and those types of investing in things that we just go, no, not a good idea. You probably see some of that stuff out there, guys. But there was this thing that I had done, I think it was last week, this little segment. It was Robinhood talking a little bit about how they've been blurring the lines. Just check this segment out again.
Before we move on, you do think Hood is a story today, and it's leading the S&P.
It's certainly a story in terms of people. First of all, it had a massive gut check, and it went back to August trading levels. But yes, they're making this acquisition, going to sort of be their own market maker for the prediction markets. Big story in the Wall Street Journal. It's hitting on a lot of the themes I've hit on for a while, which is they've just really skewed their offering toward the most active traders, and they're happy to blur the lines between sports betting and investing in stocks.
So that's it. It's just this, what is investing? And you go, well, a lot of people approach the stock market like a gambling casino.
Yeah.
And we talk about that all the time, right? They're buying and selling, trading things, trying to guess which company is going to do better than others. Somebody was asking me a question, literally last night. It says, hey, I bought this company. I saw this whole thing going on with Warner Brothers, and I thought that it would be a great idea to, buy, Netflix. And I was just going, don't do that. Don't do that. I said, I like you. So I said to this person, I like you. I think you're a really good person. You know what I'm going to do? I know that you need to borrow money to get a mortgage, let's say. I like you so much, I'm going to charge you more. And she looks at me like, what? And I said, that's what you're doing. You're saying, I really like this company. And when I really like a company, I want to buy their stock. I'm thinking that they want to pay me more to use my money than anybody else is. They want to pay me more, that the rate of return that I should get as an investor should be higher. And I'm just going, that doesn't make a whole lot of sense, does it? And she goes, well, no, I guess not. Yeah. It doesn't make a whole lot of sense. But what they did is they came on this week and they were talking about a use case for this that I thought was interesting. Check this out.
We talk about the Kalshus of the world and we talk about the poly markets of the world, but we should be talking about Robinhood, I think. Increasingly in
you don't give us enough attention.
My question to you about prediction markets is what does this all ultimately look like? Meaning, A, who's using it and how are they using it? But B, are there going to be 10, 20 firms that basically are doing this in different ways? Is it all going to be merged up into two?
Is this exploding? Because you look at, I don't know, have you guys seen the price of Robinhood stock?
No.
Oh, look it up.
It's up, right? You tell me not to pay attention to individual
my
stuff.
Goodness. Look it up. Now, if you talk about a company whose stock price has absolutely exploded, it's unreal, which is a sign that they're making money hand over fist, off of investors that are engaging in this type of activity.
It's a sign that people think they're making money hand over fist.
Well, they are. There are a
they
lot
could
of
be.
Robinhood.
I'm just saying.
I don't mean making money for the investor.
Yeah.
No, I know.
Okay, I want to make sure you're getting that.
Enron was making money hand over fist, and then it collapsed.
Well, true. Yeah, it may come out not to be the case. Yeah, that's true. Okay, I see where you're going with that. But their stock price has gone up significantly.
Yeah.
And really, and now they're getting into trading all kinds of things that, I look at as it's gambling. Quite frankly. When we talk about how you approach stock investing. Now, the question is,
That is their business model. I mean, Robinhood's, right? Starting out with the whole meme stock thing.
Yeah.
Was, it was just gambling to the moon on GameStop and
right.
Other companies and everything.
Oh, yeah.
And their stock price exploded then and then dropped way down, came back. It's probably way above that now just for the reasons you're talking about.
Yeah, and this is the issue: is how are they approaching the investing world, and what are they teaching people? And they're sliding into pure, betting markets and probabilities and all of those types of things. So we're looking at that same thing times 10. But here's what they go on to say.
What does this look like in your mind?
Yeah, I mean, two things there. One thing a lot of people don't understand about prediction markets is actually a relatively small percentage of the customers that are interacting with prediction markets are actually trading. The much bigger use case is as a source of information, almost as a complement or alternative to the news.
Now, I think that's interesting. As a source of information. Yeah. Now, guys, when we talk about markets and not trying to figure out what's going to happen, where things are going to go, which stock is better than another, which market is going to do better over the next 6 months, 8 months, 12 months, or, next 2 years, 5 years, and you're investing and you're saying, I'm not going to try to make a prediction. I'm just going to invest. He's saying that a small number of people are actually doing this trading in here. And I'm just going to have to take him as word that's the case. But I think it's an interesting use case. How are people using this information? They're using it for information purposes.
Yeah.
He says. Now, what makes markets efficient or makes them price properly, where trying to figure out what's going to happen next is a futile exercise. What makes it that way? Ease of information.
Yeah.
Ease of transaction. Adam Smith.
Yeah, I mean, it's another source of information, and I think at this point, because of how Polymarket or Kalshi or all of those are structured, and they're not perfect. There's some I won't say arbitration going on, but trying to get some resolutions on some bets, quote unquote, in Polymarket that they can't decide if it actually paid off or not. But it's gosh, how do I phrase it? It's more trusted than I'm listening to the Fed. I'm listening to the government unemployment numbers. I'm listening to, I think people at this
point
of
large numbers
view, well, it's just a bunch of
They're more people.
And they're not institutional
That's
people.
right. That's right. And in law of large numbers, the idea being that if you have just a bunch of well-educated farmers guessing the dressed weight of the oxen,
right,
it's not as accurate if you have everybody. The more people you have trying to figure out what something is worth, is what Evan is saying. The more people you have, the more likely you are that you're going to come to a proper assessment of what that thing is worth. If you have, because, let's say if I'm trying to figure out what Apple is worth.
Yeah.
Well, if I just have a couple of people in a boardroom trying to tell me what Apple stock is worth, it's not nearly as good if I have tens of millions of people all around the world betting with their pocketbooks. And that's what we know about a market efficiency. It's ease of information, ease of transaction.
Yeah.
Well, the information, that's what he's saying here.
Right.
Is the information is more accurate when you have all of these people. Exactly what Evan is saying. You have more people, and in effect, what happens is this. Here's the problem. What are they using the information for?
Making a prediction about the future.
Yes! They're still using it for the wrong reason. So even though he's saying here hardly anybody's actually investing this way, they're using it to invest that way someplace else. And I think, is that point just being missed is my question.
And that's why you see a lot of news networks starting to integrate prediction markets into their reporting. I think prediction markets are going to...
So they're using it in their reporting so that you can do what? Try to make a prediction on where the market's going to go.
Great American pastime.
It is. They haven't fixed anything here. So the question is, not very many people are doing this. What do they go on to say?
Where I'm going with this. Ultimately, do you think it really is only hundreds of thousands of people who will trade this stuff? Or do you think it actually turns into be a much larger business, the trading of it unto itself?
What we're starting to see is that, at Robinhood, we started with one contract a little bit under a year ago, which was the presidential election contract. And now we have over 1,500, I think maybe even 2,000 or more. And that's going to continue to grow. Right. And it's going to continue.
So you've got to have more than just a few people doing it if they're exploding in the number of different things you can bet on.
Yeah.
Evan.
I was just, I had an article on, and it ties into this topic. Even if Fed cuts rates again, U.S. economy may not get much of a boost. And so, it's this point of everybody's looking for a prediction, right? Yeah. And so while you were talking, I pulled up Polymarket. And so right now, there's a 93% chance, to use the term, that the Fed is going to do a 25 basis point decrease in December. Your point is, so what? The markets will adjust. I don't have to pay attention to this any more than I need to pay attention to what the Fed is saying directly. But it is more like sports, betting. I think the thing that I can bet right now that there's already funds being created to invest based on if Polymarket gives it over an 85% chance of X, Y, or Z. That ETF will be here within 2 years, I'm sure.
They're still trying to use it as much as they deny that they're using this for gambling.
Well, there's nothing else they could be using it for.
Exactly.
I mean, that's the whole purpose of it, is to exist. It's for gambling and for them to make money. I mean, that's,
but deny it. Go ahead, deny it all day long, guys. Yeah, keep going. Yeah, right.
More specialized and granular. So I think it will, in aggregate, increase the total number of traders because, the products allow you to specialize. Relative to other derivative products, they have pretty clear resolution criteria. You can kind of understand when the contract resolves positively or negatively, and you don't have to worry about your exit point, right? The exit point is sort of like but I think for any individual contract, the number of traders might not be huge, but in aggregate, there's going to be lots more contracts.
The other prediction market.
So that's what creates more. So, yeah. Hey, just a note to you podcast folks, we just came out with a retirement income guide, and I'm super excited about this. There are all kinds of myths about taking income in retirement. People worry about running out of money, and rightfully so, because a lot of these myths can actually cause that. Now, the myths that you typically hear about, number one, dividends, living off dividends in retirement. Real estate, life insurance as a retirement investment, and annuities, and interest-bearing accounts, and target date funds. There are all kinds of things out there. What I want to do is put something together that walks through why those things are problematic, number one. Number two, the other thing that I wanted to do is walk through the evidence-based research on taking income in retirement. And we got a ton of data going all the way back to 1900. What's the logic behind it? And it's intensely logical. So we put that together, and all you have to do to download that, making it super simple, just go to paulwinkler.com/relax, and you can actually get into that very easily right there. So I would urge you to do that. Check it out, because I think you're going to really like it. paulwinkler.com/relax. All right, back here on the Investor Coaching Show, Paul Winkler, Evan Barnard, Jim Wood, talking money and investing. Okay, so guys, what's prudent investing? Do we have any clue what prudent investing is? I mean, is there anything we can look at?
If only, Paul, that there was a book written that described exactly what prudent investing is.
Yeah, what do you think it might be called?
They could name it something like Restatement of the Law.
Third. The American Law Institute.
Yeah, and they could write it for how to prudently manage an investment portfolio. They could, talk a little bit about that, couldn't they? Yeah, that would make sense. Or they could take Jim Cramer's take on what is prudent investing. Let's see what he has to say.
A lot of times in life, people who look reckless turned out to be prudent. And I love what that gentleman said, and he's smarter than I am about all this stuff. When it comes to prudence and recklessness, I'm better.
Well, your latest book is about taking risks, swinging for the fences in a sense, and you think corporate should do the same.
So swinging for the fence.
That's prudent.
What do you think? Do you think that sounds prudent? Sounds prudent to you guys? I mean, that's and I love what he says his job is. So those of you that don't know, Jim Cramer, CNBC, he has all these courses on investing. And, has all these great ads and testimonials about how people love his teaching about investing. And so he talks about what is prudent swinging for the fences, just going off and just crazy risks. But what's his job? Let's really, what is it?
I have at times in my career focused on the wrong thing because it was exciting. I thought it was something the viewers wanted. It was a sideshow. It didn't make them money. When I worked with Roger Ailes, and I'm not proud or proud, depending on what you think about Fox, like he would call me in and he said, well, that was really great. Did you make any money for people? And I say, no, but you see, I thought I generated heat.
Right.
There you go. Now that's the job you got right there. You need to generate heat.
He did some of that. He generated some heat. Maybe some people got burned.
Oh, that's good, Jim.
Man,
that's good. That was really good.
he's on fire.
But you think, well, what? I mean, the comedian.
Which one?
The guy that did the whole thing.
Jon Stewart.
Thank you. Tell him about that.
Well, he just ripped Cramer apart on one show for some of the calls he had made during 2008. It just destroyed him.
Yeah, because he basically told people, this is great, Lehman's wonderful, you need to invest in it, it's no problem, it's all great, and next week it's gone. And that is, you guys could do better. And he just hangs, yeah, we could do better. And of course, we always talk about the Kellogg School of Management study. They found that you do better by selling the things that he was telling people to buy. But it is that approach. It's not just Cramer. It is the industry.
Right.
It is the investment industry that the idea of investment advice is to tell you which companies that you ought to buy, which to stay away from, areas of the market to get in, areas of the market to get out of. That is not investing. That is not prudent investing in our humble opinion. Hey, this is Paul Winkler. Hope you enjoyed today's edition of the Investor Coaching Show. If you want to learn more about what we do, go to our website, paulwinkler.com. Until next time, I'm Paul Winkler, reminding you that I believe that more educated investors are more confident investors, and confident investors are more successful investors. Have a great one. Advisory services offered through Paul Winkler, Inc., an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and not intended to provide specific advice or recommendations for any individual. To determine what investments are appropriate for you, please consult with a financial advisor. Paul Winkler, Inc. does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.